Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Boothra. FMCG major Marico has reported an inline set of earnings in the third quarter, hopes to end the year with a margin of 18 to 19%. We'll get chatting with Saugata Gupta, MD and CEO of Marico, to discuss their outlook. How has demand been so far in Q4? We're nearly done with half of the quarter. What are the trends?
I think it's too early, but what I can tell you is that I think the worst is over as far as inflation is concerned. Now, we strongly believe that there's a significant correlation between inflation and demand for FMCG because obviously whenever there is high food inflation, especially at the bottom of pyramid and in rural, people either downgrade or titrate. I think the second thing which has happened for us especially also is that we have finally got the right pricing because of the fact that there was significant volatility in our input costs. There is much more stability. So all I can say as far as rural consumption is concerned, I think the worst is over. We are seeing a very gradual recovery. The recovery will not be, I think, very sharp, but there will be a gradual recovery. And we are extremely hopeful that our growths, both in earnings and in volume, will be better this quarter than what it was in Q3. It will gradually improve again.
Okay, gradual improvement is what you're expecting. But Mr. Gupta, if we look at value-added hair oils, that continues to remain weak on account of soft demand. So are you looking at price cuts there given the raw material environment currently?
See, I think there are two obviously components of that drive input costs as far as value-added hair oils is concerned. One is crude, because there are a lot of crude linked products, and the second is vegetable oils. Well, vegetable oils stabilized. If you look at a YOI crude, it's still, pre-Ukraine, it's still at a slightly elevated level. So I think what will happen is obviously we have to optimize between providing value to the consumer at the same time recover some margins. So we will try to play out that. And I obviously strongly believe that at the end of the day, volume growth and maintaining market share is critical. Margins always come. And therefore, we'll play that optimized game. It's too early to take a call on what do we do on pricing. Wherever we have got a significant deflation, which is in our edible portfolio, coconut oil and Saffola, there we have taken price drops.
Okay. Could you give us an indication what kind of margins are you targeting in FY24? You've already given us the margin guidance for this year, 18 to 19%. What could next year look like? What would be the margin triggers?
If we look at a sequential improvement in our margins, it's happening sequentially and YOI. And if there are no what I call black swan events like the one which happened, which is post-Ukraine, commodities are okay, and our cost management programs continue to, be aggressive as usual. It will be definitely 19% plus. Now, the only thing we have to watch out for in some of our countries and international business, there has been currency depreciation. But I think we have been relatively resilient on it. But as you know, currency depreciation leads to both losses at the in translation losses as well as some kind of erosion in the country itself. But I think the way trends are, I think 19% plus is very much possible.
Okay, that is about margins. But can you tell us about your international business? What would the sustainable growth rate in that particular segment be?
I think the international business has a medium-term aspiration of delivering double-digit constant currency growth in spite of all the headwinds in some of our markets, which is a combination of inflation, currency depreciation, and consumption, stresses. I think our international business has been extremely resilient, and we hope to continue that pace. I think in most of the markets we have a extremely robust business based on strong fundamentals. And as a result, I think we are one of the very few companies which have been delivering a very predictable, sustainable results quarter after quarter. So I think double-digit constant currency growth is something which we should be able to deliver.
Double-digit constant currency revenue growth in the international business. So you've grown both your food and digital business revenue to scale now. What is their contribution to the profitability of the company?
I think, as you know, food and digital was the two big drivers of our diversification agenda. and we are on track to achieve broadly the numbers which we had set aside. And between food, digital, and the premium portfolio, I think we will have in the next 2 years a mid-teen contribution, which was sub 5 in 2020. So it has been a dramatic shift, and food, I believe, has been a very successful example of how do you drive the total addressable market using a under-leveraged but strong brand like Saffola. I think as it gets scale, and we are starting our journey to drive profitability. In the first instance, let me tell you, the food makes higher gross margin than Saffola edible oil, which itself is good because it's accretive, the diversification. And as it scales up, other than the cost structure on food, there are also potential for halo effect on advertising, which leads to, lower total A&P system cost between Saffola edible oil and Saffola food. As far as digital is concerned, I think what helps us is that I believe that the ecosystem is little more rational with respect to A&P spends, and therefore the customer acquisition cost as well as the A costs are coming down in the system. And therefore, both these, now that it has got some sort of scale, there'll be significant focus on improving and having a much more robust path to profitability.
Okay, you're talking about path to profitability, but Mr. Gupta, by when will these segments get profitable?
Look at food business. I think our core, which is the oats and masala oats, makes good money. So I think as I said, that we have now, with our scale and our capability, there is a definitive path to profitability, and we are extremely confident that once each of the subcategories gets a critical mass, there is a defined path to profitability.
All right, Mr. Gupta, thank you so much for joining us and taking us through the business outlook and analysis of Q3 numbers as well. That's the word coming in from Marico. By the way, we have Kolte Patil's numbers at the bottom of your screen. Of course, that's the P&L number, and because of accounting recognition and project revenue recognition as well, those numbers are looking lower, but they had given a quarterly operational update as well, and they had reported highest ever quarterly sales of 716 crore rupees in the quarter gone by, and that is something that they had given in the month of January as well. So for real estate companies, it's more important to look at their pre-sales and volumes as well, other than apart from the P&L, because that actually gives you a very volatile picture on a quarter-on-quarter basis as well. So that's Kolte Patil for you. But with that, we'll slip into a short break now. But as we do that, here's some exciting news. The most coveted leadership awards are back. CNBC-TV18 honors the visionaries behind outstanding businesses, catch the most influential, credible, powerful IBLA jury on February 8th. Welcome back. Still tuned into Midcap Radar on CNBC-TV18. Well, some recovery from the lows is what we are seeing. 60 points off the lows right now. Nifty sitting with cuts of 91 points at 17,763, and the lows were around 17,690. So yes, there is some recovery which is underway, but we'll have to see whether that sustains or not. Midcap index, that's the top performer today with gains of 1%. While we've been talking about the rout that we are seeing in the Adani Group stocks in the last couple of days, look at the metal index, because Nifty metal index is down 1.5% in today's trading session, and this year itself it's down 14%, and most of those losses have come in this month itself. So this month is what the index shows is down around 10%, so a big fall in the Nifty metals index. So those stocks will of course be on our radar as well. And Divi's Labs, that's the stock that should also be on your radar, reported really weak set of numbers on Friday, and again after so many downgrades and EPS cuts as well. So today it's down around 4%. So that continues to see a downtick in trade today as well. But it's time for our special segment, Midcap Spotlight. Mangalam is joining us and focusing on Varun Beverages, reported quarterly earnings just a while back. Mangalam?
That's correct. Varun Beverages is surging post their fourth quarter calendar 2022 numbers, which is October to December. And that's on account of a couple of factors. Remember, it's a seasonally weak quarter for a company that makes cold drinks because of winter. But it is this delayed winter, festive season, and a low base, because it was also the first festive season after 2 years of COVID-related impact that boosted their performance. A strong quarter coming in. 28% jump in their overall revenues, closer to 2,200 odd crores on the top line. The gross margins improved as well, and as a result of which we saw a big improvement in their EBITDA too, and that was primarily because of operating leverage coming in. The margins for the company 13.9% versus 12%, and the net profit jumped by around 150 odd percent on a low base. Again, the net profit was led not only by the revenue and the EBITDA, but a couple of other factors like lower effective tax rate and higher other income boosted the net profit as well. The overall volume growth of the company this time around was 18%, but at the same time, 70% of their revenues coming from carbonated beverages. That saw a 25% volume growth. That was extremely strong. Juices grew by about 17%, whereas water grew by just around 5 odd percent. Sting, which is the energy drink, which does well for them in terms of realizations and margins, is now about 10% of sales, and most on the street are betting for higher contribution coming in from this to improve their performance going further. And as a result of which, their net realization increased by 6% as well. That's just the beverage part of the business. They do have a big trigger coming in from the snacks part as well. So let's see how that plays out. But for now, in a seasonally weak quarter, Varun Beverages actually reported a very strong set.
Thank you very much for all those details. Let's also take stock of Aarti Industries and Sumitomo Chemicals. Reported the Q3 numbers. How did they look?
Well, for Aarti Industries, it was a decent set, Reema. Remember why the numbers are not comparable? Because in the base quarter, there was a big fee income that the company received. So we are looking at the numbers on a quarter-on-quarter basis. Revenues are down 1% for the company at 1,667 crore rupees. EBITDA is up 8%, and because of that calculation, margins have come in at 17.2% versus 15.2%. Profits are up 10% for the company on a quarter-on-quarter basis. If we adjust for that fee income, company has given those calculations as well. On a YOY basis, revenues are up 12% and EBITDA is up 26%. This is on YOY basis. So company says that this time around 81% of their revenues came in from value-added products, and product offtake linked to textile industry like dyes and pigments remains subdued. This is something that the company has been telling us for last 2-3 quarters. However, they expect it to recover in the quarters to come. In next 2 to 3 quarters, these discretionary segments should do well for the company. They witnessed quarter-on-quarter decline in some of their costs as well, related to logistics and freight costs as well. In terms of FY24 outlook, they are expecting an EBITDA margin of 25 to 30%, which is as per the previous average. They reported 28% margins in FY22, so some improvement out there. They have a capex plan of 2,500 to 3,000 crore rupees, and they're adding new chemistries and value-added products as well, close to around 40 plus new chemical products. The conference call is at 4:30 p.m. today, but of course the stock is up around 6 odd percent on the back of good outlook and the fact that the company has spoken about lowering raw material prices as well. On the flip side, Sumitomo Chemicals is lower in trade. Margins were under pressure. Profits, however, were higher due to higher other income. So overall, revenues were up 7.5%. EBITDA, however, declined by 5%. Margins are lower by 190 basis points. This is because of higher raw material prices, and generally, agrochemical companies this quarter have seen some pressure on margins as well. Profits are up 1.7%, and this is led by higher other income for the company. Nirmal Bang has trimmed their FY23, FY25 EPS estimates and target price as well. They have a target price of 518 rupees per share on the stock. But yes, today the stock is lower by 3%.
Okay, just add another one. Intellect Design Arena also came out with numbers over the weekend. The stock is down 4% in trade as the growth rates have come off very sharply. Year on year, Intellect Design Arena has seen a growth of only 7.5%. In Q2, its revenue growth was 16-17%. In Q1, its revenue growth was more than 30%. So the revenues have been coming under pressure for Intellect Design Arena, and the stock is subdued in trade. Get into a break. We'll come back with more. Welcome back. The Adani Group stocks in the spotlight. As you can see in news coming in, the Adani promoters have posted amounts to prepay over $1 billion ahead of its maturity of September 2024. With the amount of $1.1 billion, they will be releasing some of the pledged shares of their group entities. The promoter pledge in 3 Adani Group entities will now come down. Foremost is Adani Ports, where almost 12% of promoter holding, which was pledged, is going to now be released. Secondly, in Adani Green, where about 3% of promoter holding, which was pledged, is now going to be released. And in Adani Transmission is 1.4%. But the bigger chunk, the maximum amount of promoter pledge which is being released, is going to be in Adani Ports. And this is going to come in as a bit of a relief and soothe some of the soothe some of the nerves post the rout that we've seen in Adani Group, prices after the way stock prices have collapsed. So now the Adani promoters will be pumping in money to the tune of $1.1 billion to release the pledge on its shares. And the important bit is this is coming in ahead of what they had earlier planned. September 2024 was the maturity, but the promoters are now going to be doing it right now in Adani Ports, Adani Green and Adani Transmission. But the bigger chunk is going to be in Adani Ports, where the promoters will be reducing their pledge by close to about 12%. And this is going to come in as a big positive. Let's pull up the intraday chart of CN Adani Ports. The stock was anyway holding up in the green, but I think it was up close to about 3.5–4%. And now with this development, the fact that the promoters are acting, right? Yeah. I think it's going to come in as a big relief to the stock price. The intraday will also come up.
Yes, it's up 5%. And just to give you some perspective, we were looking at the pledged shares right now as a percentage of the promoter shareholding. For Adani Ports, it's at 17.31%. And this makes it lower by around 5%. So 12% is what the promoters will be releasing. For Adani Green Energy, the current pledged shares to the promoter holding is at 4.36%, out of which they will be removing 3% as per the release. And in Adani Transmission, the total pledge is 6.62% of the total promoter shareholding. They will be reducing it by 1.4%. So that takes it to around 5.2% as far as Adani Transmission is concerned. Of course, the big one is Adani Ports here. It will be reduced from 17.3% to 5.31%. So Adani Group stocks in focus. Adani Ports though is in the green, and there's some recovery for Adani Enterprises from the lows as well. It is in the green at the highs of the day right now. With that, let's move on and talk about some more stocks which are in focus. It is Blue Star on our radar. Its new plant in Sri City, Andhra Pradesh has kicked off operations. The factory has a capacity of 1.2 million room AC units and an outlay of 350 crore rupees. Blue Star MD B. Tyagarajan spoke exclusively to CNBC-TV18's Judith Sanet on their revenue outlook and the market's growth prospects as well. Listen in.
This is a state-of-the-art facility which we are showcasing to our dealers and customers today. It has a capacity of 3 lakh units to begin with in phase 1. It will go up to 1.2 million units. For example, we are producing around 35,000 units per month. It will end up producing around 1 lakh unit per month when the phase 3 is commissioned. Okay. Now this is under the PLI scheme. There we have participated at an investment of around 156 crores, and we will be getting around rupees 73 crores as a PLI benefit. Yeah. This is for backward integration in order to create the component ecosystem. Government of India ended up announcing this scheme. Now this factory is the second one for us as far as the room air conditioners are concerned. Yeah. We have a capacity of 6 lakh units already in Himachal Pradesh. This unit this year will add additional capacity to that. And this is necessary because we will end up this financial year selling around 8 lakh units. And we are planning to sell 1 million units in the coming financial year. All right. Therefore, it is important for us.
And that's a big deal given the fact that there's so much emphasis on supply chain today. So am I given to understand that overall about 350 crore rupees of investment would go into the operations of the plant itself as things stand?
That's right, because PLI scheme is applicable only for plant and machinery and on certain categories. Overall, we have invested 350 crores for the phase 1, and we will be investing additional 200 crores for the phase 2 and 3.
So what is your product pipeline looking like, and how will this plant help you expand and grow on that front?
In order that we grow our market share from the current level of 13.5 to 15, we have to make the product even more affordable. Right. So there are specific ranges which are making it more valuable for the customers. For example, the starting range, which is the MRP of rupees 29,990. And we have made that breakthrough as well through this factory.
Okay, with that, out of time on Midcap Radar. Thank you very much for watching. Your stocks when we return.
Co-powered by